If you've been hunting for a simple, one-fund way to get global exposure for the long haul, chances are you've bumped into two Vanguard heavyweights, the Vanguard FTSE All-World ETF with the ticker VWRP and the Vanguard FTSE Global All-Cap Index Fund. On the surface, they sound almost identical. Both are from Vanguard, both give you global stock market exposure, and both are built for long-term investors. But under the hood, they're doing slightly different things, and those differences actually matter when you're deciding which one to pick. Let's start with VWRP, because for a lot of people, this is the default global ETF. VWRP tracks the FTSE All-World Index, which includes around 3,600 companies from over 50 countries, across both developed and emerging markets. But here is the important bit. It only includes large and mid-cap stocks, so you're getting exposure to about 90 to 95% of the global investable market, but you're missing the small-cap space. That's not necessarily a bad thing. Most of the world's market cap is in those larger companies, but it's something to be aware of. In terms of diversification, it's incredibly broad. You're getting companies from the US, UK, Japan, Germany, China, and so on. About 10% of the fund is also invested in emerging markets. So you do get some of that higher risk, higher reward exposure, but it's all built into a single package, which makes life a lot simpler. As for the actual companies you're investing in, it's a who's who of the global stock market. You've got Apple, Microsoft, Amazon, Alphabet, Nestle, Samsung, Toyota, pretty much all of the biggest players across every region and sector. So you're not betting on a single country or industry. You're spreading your money across thousands of the world's most important businesses. Now let's talk details. VWRP is a physically replicating ETF, which means it actually holds the underlying shares, not derivatives or synthetic exposure. That's a plus for transparency and simplicity. It's also an accumulating ETF, so any dividends the companies pay out get automatically reinvested into the fund, helping your investments grow over time without you needing to do anything. That's ideal if you're focused on long-term growth rather than income. The fund launched in July 2019, so it's still relatively young compared to some of the longer-running ETFs out there, but it's built a solid track record. Since inception, it's delivered a total return of just over 70%, which is impressive when you consider that includes a pandemic, a rate hiking cycle, and all sorts of market volatility. In other words, it's already proven it can ride through deep ups and downs. And it's not just performance that's grown. The fund itself has ballooned in size. As of now, it holds over £16.6 billion in assets. That kind of scale is a good sign. It shows strong investor confidence, and it also means better liquidity and tighter bid-ask spreads when you buy or sell. The total expense ratio comes in at 0.22% per year. Not the cheapest ETF out there, but for something with this level of diversification, including emerging markets, it's still very reasonable. You're paying a bit more than for a pure developed market ETF, but you're getting a more complete picture of the global economy. So what's the bottom line with VWRP? Well, it's clean, it's simple, it gives you instant diversification across nearly 3,600 companies in one trade. You don't need to think about which country or region will outperform. You're just riding the wave of global capitalism over time. For a lot of investors, this is the definition of buy and hold core fund. But what if you want even broader exposure? Something that goes beyond just large and mid-sized companies? Well, that's where the Vanguard FTSE Global All-Cap Index Fund comes into play. It's technically a mutual fund, even though it has index fund in the name, and it offers something that most ETFs don't: access to small cap stocks alongside the large and mid caps. So instead of owning around 3,600 companies like VWRP, this fund gives you exposure to over 7,000 companies from around the world. That includes everything from global giants like Apple and Nestle, all the way down to smaller, fast-growing companies you've probably never heard of. In total, it captures about 99% of the investable global equity market, which means you're truly buying a slice of the entire world economy. The fund launched back in November 2016, and since then it's delivered a very strong return, 122% as of now. To put that into real world terms, if you had invested £10,000 back when it launched, you would now be sitting on over £22,000 just by holding and letting compounding do its thing. That's the power of broad diversification combined with time in the market. It's also become a popular choice among long-term investors, with over £5 billion in assets. So while it doesn't have the same size or instant tradability as an ETF, it's definitely well established. Now, one important distinction here. This fund isn't an ETF, it's a mutual fund, sometimes called a unit trust in the UK. So what's the difference? Well, with an ETF like VWRP, you can buy and sell it during market hours, just like a stock. Prices fluctuate throughout the day, and you have more control over exactly when you enter or exit. With a mutual fund like this one, you don't trade it on the stock exchange. Instead, you buy in directly through a platform like Vanguard, and the fund only prices once per day, usually in the evening. So if you place an order in the morning, you won't know the exact price you're getting until later that day. For most long-term investors, that's not really an issue, but it's something to be aware of if you're used to ETF style flexibility. Another detail, this fund comes in two versions as well: accumulation and income. If you choose the accumulation version, any dividends the companies pay out are automatically reinvested for you, helping your investment grow without lifting a finger. And that's great if you're focused on building long-term wealth. On the other hand, if you'd rather receive those dividends as cash, maybe to supplement your income, the income share class does exactly that. As for costs, the ongoing charge is just 0.23% per year, which is only a fraction more than VWRP. And if you're using the Vanguard platform, you can get started with as little as £500 as a lump sum, or just £100 per month through regular investing, making it one of the most accessible global funds available to UK investors. So why might someone choose this over VWRP? Well, it really comes down to breadth. If you want to own as much of the global market as possible, from the largest multinationals down to small, nimble companies in far-flung corners of the world, this fund does it in one go. You're giving up the ETF structure, but in return you get maximum diversification and the track record that speaks for itself. The bottom line is that for patient, long-term investors who want to own the entire global stock market and are happy to keep things simple and automated, the Vanguard FTSE Global All Cap Index Fund is about as complete as it gets. So which one makes more sense? Well, if you're looking for simplicity, liquidity, and easy access, especially if you're using brokers like Freetrade or Trading212, VWRP is a brilliant option. It's widely available, highly diversified, and built for long-term hands-off investing. But if you're the type of investor who wants to own as much of the global market as possible, including small caps, and you don't mind going the mutual fund route, the Global All Cap Index Fund gives you that full market exposure. It's a bit more comprehensive and potentially more rewarding over decades. Either way, you're getting an excellent global portfolio in one fund. The real decision comes down to whether you want to keep it ETF simple or go the extra step for broader exposure. But the bottom line is both funds are excellent. You really can't go wrong with either if you're investing for decades and sticking to a long-term strategy. But if I had to pick just one, I would probably lean towards Vanguard FTSE Global All Cap, purely because of the extra diversification from small caps and its slightly broader market coverage. Over 20-30 years, that small difference can potentially translate into slightly higher returns. Right, if this helped clear things up, give it a thumbs up and hit that subscribe button. Then check out this next video where I compare VWRP with some of the most competitive global ETFs right now: ACWI, FWRG, and SWDA. See you there.